Welcome back into another episode of the XRP podcast. Today, though, is going to be a bit of a different. Our guest is Dr. James Thorne, who is the chief economist and strategist over at Wellington Altus. If you follow him on X, he is known out there as Dr. J Strategy. And you maybe understand he's not really interested in the consensus around recession talk. We are essentially in a new world order, potentially, and he's sounding the alarm on really what could be focusing into what is often talked about, and that is kind of a Bretton Woods 2.0, and maybe a new supply side supercycle that's fundamentally rewriting the global order. Now, why does that all matter around digital assets, which is what we talk about mostly here on the show? Well, it does mean that we are going to see digital assets starting to play a major role, not just here in the US, but really abroad. And this may change a complete visual point of how the dollar reacts and also maybe how we start to see US playing a new power struggle around that. So we're going to dive in. It's going to be a good one today. You guys know what to do though, and that of course is just like and subscribe. That's all we ask of you. We do a lot of great interviews here, and Dr. Thorne is no different. So let me bring on James right now. How are you? Is it Dr. Do you like Dr. J or is it just James?
Oh, I, I'm ripping off Dr. J from the basketball.
I love it.
You have to have something, right? And
Yeah.
so, we're in the communication business, and in some sense, we're in the entertainment business. And
Yeah.
when I was doing this, so I came back from the United, even though I'm in Toronto, I came back from the United States. My most of my career is down south. My dad's American. And then when I came back and we joined Wellington Altus, which is the fastest growing independent platform in North America, we decided to basically really focus, or I did focus on X. And so I decided to have a handle, and it's sort of a tip of the hat to Dr. J, but also, one of the legends in macro strategy, Dr. Ed Giardini as well. He used to
Okay.
cut him Dr. Ed. So that's where that came from.
I like it. For the kids out there watching this podcast, Dr. J was a great basketball player. He was maybe previous of for MJ in the sense of that kind of star power at the Sixers. So played great ball back then for sure. So James, let's get into a little bit about your thesis around what's going on in the Middle East, because this affects not only the petrodollar, but how we may see global finance line up over the next decade in a very quick way. We were talking a little bit off screen about this, and you had some very interesting statements there. Walk me through your thesis right now of what you think is happening over there.
Well, I think President Trump is implementing his national security strategy, one, and the global economy is going through a generational change. There's no doubt about it. And to the center of that would be Iran in the Middle East in terms of state sponsored terrorism and a nuclear threat. And so the way I am framing this, at least in my lifetime, is that I think Operation Epic Fury is going to be successful. And it's going to be akin to the fall of the Berlin Wall and the end of the Cold War back in the late 80s and early 90s. And with that,
Interesting.
you're going to get a drop in geopolitical risk. The terror premium is going to come out of oil. And I think I've been writing, I'm all about, what we are really talking about in mainstream media isn't what's really going on. I
Hmm.
think the great game, as I call it, the new great game is between the United States and China. And I think, really what is happening is that the Americans, or President Trump, didn't want China to get a foothold into Iran, use it as a staging point. And so with the nuclear threat, decided to do something that presidents for at least all of my lifetime have been talking about.
Yeah.
And so, good on him. Inflation's or a short-term cost is going to be a rise in prices. But if you are building portfolios, what you have to think about is, what does this look like on the other side? And that's where I
Mhm.
go back to late 80s, early 90s with the fall in the geopolitical risk. And then with regard to crypto, it's, in the 80s, in the late early 90s, it was the Telecommunications Act that was passed that really allowed Wall Street and society to invest in the internet. I would suggest to you that what's happening now with the passing of the Genesis Act and the Clarity Act is that we're going to embrace digital assets. We're going to embrace blockchain. And I think the period of catch up is going to be profound because the Biden administration and the Fed and Wall Street has really been stalling innovation for over 5 years. And so we have a catch up phase coming our way.
Yeah. Well, you saw Scott Besson. He was talking about this in his op-ed in the Wall Street Journal yesterday. We featured it on another show, and he akined this to essentially national security. Is what's happening in digital assets is that this has to go through. It changes the dynamic around what we need in the U.S. and maybe all Western countries is really around the idea of where the future of finance is going. With what's going on in the EU, you said something, or in Middle East, you said something interesting there. Obviously, China gets a tremendous amount of their oil at a highly discounted rate from Iran and in that region. This changes things possibly. And also, we're seeing this kind of this new toll. I don't know if this is going to stick around. Do you think this will stay within the Strait of Hormuz, or do you think other countries are going to start to diplomatically get that eased up?
Well, I would suggest to you that the Strait of Hormuz is international waters. So even though Iran is basically banging pots and pans about it, and really, being the youngest of four, right? As kids, possession is 9/10 of the law,
Yeah.
right? And so they are controlling it, and maybe that has to change. But I think you have to add into that, and I kind of touched on it, the doctrine that the president put out late last year, which was basically an addition to the Monroe Doctrine,
Mhm.
right? And we call it the Trump corollary or the Trump Doctrine, which is, look, we're going to focus on the Western Hemisphere, and we're going to make sure that China and Russia are out of the Western Hemisphere in terms of
Right.
owning ports, of owning canals, and owning significant portions of natural resources. And I think, so from there, when with the Maduro situation, the United States, or I'll call it the Americas, are controlling a significant amount of oil and natural resources, which I don't think the world has really started to process. And as the
Yeah.
president says, we don't need the strait, right? Europe and the UK do. And so, the other thing I would suggest to you is that we're getting to the point where it's real, where you've got countries that have been relying on the hard power of the United States for a long period of time.
Mhm.
And they have embraced green. They do not like our politics over here. And I think the president and Marco Rubio are basically coming and saying to them, well, guess what? We are not going to allow Russia and China to basically take over the world. Agreed. But for you to think that we are going to do what we did in the past, we can't. We're not going to. I think they're going to pull troops out of Europe. I think we're going to focus. We're going to focus on. We're going to go back to the way it was after World War One. And I think, the short stand of the stick here is the United Kingdom and Europe. Yes, China does not get cheap oil.
Yep.
And I completely keep saying that the United States now sits at the center of the hydrocarbon chessboard, and thus we do have a new great game.
So, with all of that happening, and you look at what's going on with NATO, because that has now become a very, very slippery relationship between the U.S. and what's going on with NATO. How do you see that playing out into this? Because obviously we're talking about an entire global region in the EU that is in a position of right now, I would say a bit of a weak position. How do you think that the US do you think he's in more of the Monroe Doctrine model where he's trying to get into more of just a Western regional position? Or do you think this is just a play on trying to dismantle NATO as a whole?
No, I think, it's a consequence. But when you hear President Trump or his cabinet talk about the America First strategy or the American system, you instantaneously go back to the 1800s after the US Revolution with Alexander Hamilton, Abraham Lincoln,
Mhm.
Andrew Jackson,
Yeah.
and Henry, Clay. And what happens? It's America first. We raise tariffs. And I mention Andrew Jackson because Jackson questioned the Fed and actually shut down the first iteration of the Fed.
Yeah.
There was a period of time where the West was they stopped immigration policies, so coming over and moving out west was stopped, and so we had this America First policy. And then, okay, so that's fair. So that's where I'm at, right? And so my job is to interpret the policies and try to figure out where this is in history. And I think to add on to that, the interesting thing is that a couple of things. One is, first off, you had a major structural change in the late half of the 1800s because of automation and manufacturing, where the US economy had to shift from an agricultural based economy to a manufacturing based economy. And that's what we're doing right now with AI. That's one. And two, going back to your question about Europe, the interesting thing is that in the early 1800s, Germany was reunified. And it took them a couple of decades, but by the time the 1900s came along, they were the dominant economy in Europe. And my opinion is that World War I was really fought over the fact that the German economy was going to cut a free trade deal with the Ottoman Empire. Right? And so I think, yes, we're gonna go back, and they're clear. We're going back to the policies of the 1800s. We're no longer going to be the policemen of the world. And we can say we don't wanna do it, but also let's be frank, Paul, we can't afford it anymore. We've got
Right.
debt to GDP of 125%. Why should we have 100,000 troops in Europe with people that don't like us, that don't
Yeah.
respect us, right? So I think they're very clear and transparent in what they're doing. And I think people are in denial. Up here, it's funny where with Mark Carney, when he was at Davos, he quoted something which was profound, right? Nostalgia is not a strategy, right?
Yeah.
So we're not going back. And of course we're going to have people complain about what's going on. But the United States is going through one of these periods of time that historians are going to write about for centuries. This is a major shift. And what I say is, great, let's make money on it. Let's figure out how we can position and recognize the fact that these the folks that are in the White House right now are very thoughtful. They have a strategy and they're implementing it.
Interesting.
And let's call a spade and let's invest accordingly.
You look at some of the moves here by Rubio. This was a statement that he put out. Let me share this real quick. I'll share my screen here just to show the Axon post. I actually put this out this morning, and it was in reference to what he says. It says, we won't have to talk about sanctions in 5 years because there will be so many countries transacting in currencies other than the dollar that we won't have the ability to sanction them. I think this guy is probably a future president or at least a vice president. For him to make that statement, that's pretty significant. 5 years is a very short period of time. How do you think in 5 years, from a global perspective, where is the United States? Where is Russia and China in terms of how the globe is setting the finance chessboard?
Yes. So it's interesting. We've got to go back to Bretton Woods, and Keynes warned Harry Dexter White at Bretton Woods that you really do not want the US dollar to be the medium of exchange of the
Mhm.
global economy, because every other economy in the world can apply mercantilist policies, wipe out your middle class, wipe out your
Yep.
manufacturing base, and you get the rise of populism. So there is a double-edged sword with being the medium of exchange of the global economy, right? So that's one. So, and that's where we are right now when you think about it
Exactly.
with Keynes. Okay, so the way I frame it with Bretton Woods 2.0 is, just because you have other currencies basically, or other ways of means of doing transactions, doesn't mean, I call it king dollar, isn't still existing. I mean, the United States is still going to have the deepest credit markets in the world. I think the New York is going to be the preeminent financial center of the world. I think we're
Mhm.
seeing the decline, the continued decline of the city of London,
Yep.
right? So if we transact in stable coins or Bitcoin, I mean, I laugh because everybody says, well, Bitcoin's going to replace the dollar. And I say, well, Bitcoin is denominated in dollars, right?
Yep.
So I think there is going to be a new Bretton Woods system. I honestly think that the United States dollar and US treasuries are going to be a very, very important part of it. But I also think going back to what's happening, going back to the 1800s, I don't think, they want the bird, right? So let's let's negotiate a Bretton Woods 2.0 where the US dollar and US treasuries are a very, very important part of it. But then let's also put Bitcoin in there and let's put gold in there and we can transact that way. So I think Marco, sorry, I should say Secretary Rubio is correct and very shrewd in terms of how he thinks the world is going to evolve over the next 5 years.
Listen, he's done a really good job in understanding how to navigate this, which even surprised me. He's from our state here, and we've watched him, govern as a senator for quite some time. And I have never really seen this side of him where he really gets into the global theater, and he's done a really good job in understanding how to navigate it. Okay, so you look at let's go down the track that your thesis is based on. Trump and the administration pulls out of the EU and Europe as a whole, pretty much, maybe not lock stock, but significantly. And then you look at the position right now that, of course, Russia is playing. China is also playing, if you consider Belt and Road and everything, all of their initiatives over the past 2 decades. What happens to the EU? Do they become diminished as a power, or do you feel like they get their feet under them? Where do you think that goes?
What? Well, we deconstruct everything what happened after World War II. I mean, when you think about what's happening, right? We are allowing Germany and Japan to become offensive military powers. And I
Mhm.
want you to just sit there and think about that coming out after what we thought after World War II.
Right.
And so the EU was really developed. It came out of the first iteration was an association with coal and steel to ensure that the factors of production of war could not be controlled by anybody in Europe
Yeah.
so that we could make sure that there was not going to be another world war in Europe. And then it's evolved over the years, right? But look, it's to me, it's a failed
Yeah.
experiment. I mean, I had the fortunate opportunity early in my life to have dinner with a guy named Robert Mundell. I was teaching at this small liberal arts university on
Mhm.
the Vermont-Quebec border called Bishops. And, for those of you who don't know, Robert Mundell was one of the fathers of supply side economics, and he helped Ronald Reagan in his economic policies. He was also the father of the euro, and he got the Nobel Prize. Way back when in the 90s, he said that the Europe was a failed state. The EU
Interesting.
wasn't gonna make it. So this isn't to me, this isn't profound. It just amazes how long the things take.
Okay.
But Paul, in our lifetime, I don't think it's gonna be in our lifetime, but it's gonna be interesting to see how history rhymes when I'm honest, Germany's going to be okay. It's just gonna take them a decade or 2. Japan is going to be okay. If they become an offensive military power to counter the Chinese in the South China Sea, it's going to be very interesting to see what the geopolitical dynamics are going to be because we are ignoring all of the fears that we had coming out of World War II. It's going to
Yeah.
be very interesting.
Well, and you kinda look at where the UK, you mentioned it earlier, the City of London, obviously, which has pretty much codified global finance for quite some time, a huge role in even the Strait of Hormuz in terms of their ability to ensure the traffic through there. So they had always had you know, some reach into that region. And we now see Trump's move, which I think a lot of people would, in the United States, it's a 50-50 split right now in support and anti support. for what Trump is doing. Granted, the off ramp is now in play. Many people think that this is maybe been planned for weeks. This, of course, correlates into the thesis that you're talking about. But how do we deal with because you're talking about supply side here. So how do we deal with the effect of how this may really hit inflation in the Western countries, whether it's through energy or supply chains issues in terms of disruptions, et cetera? If we do you think that's a short-lived inflation hit in the United States? Because you're not necessarily thinking a recession is anywhere near.
No, no, and the underlying data is showing that, the US economy is strong, right? I mean, there is one area that the Fed, we're gonna, let me just, digress for a second. Monetary policy really works effectively and efficiently within the real estate market, and the Fed is about
Right.
too tight, and that is just by looking at the real estate market. Okay, so the Fed has to cut rates for that, but there are other areas. Look at we've got the retooling of manufacturing in the United States. When I worked in the United States, I worked for a bank that was predominantly owned by Warren Buffett, and we owned flyover com
Mhm.
country, and I would drive through there. In Middle America, since China has gotten into the World Trade Organization, has been hollowed out. Same up here in Canada, right? So it's in North America, we've been hollowed out. So that is going to be replaced, and that renaissance is going to be something that your viewers and investors need to get exposure to. And it doesn't need to be the esoteric stuff.
Right.
It's stuff like cat and deer, right? But having said that, when you look at what is really going on, is we've got a retooling of the United States, right? We're going to go back and we're going to and to be clear, just going to paraphrase Secretary Bissent, we're going to de-risk from China. We're
Mhm.
not going to, step away. We're just going to make sure that we are our national security, as you were talking about, is secure, right? And that's okay, and that's what should be done. And so I think what's going to happen is you're going to get a peace dividend, right? The terror premium is going to go away, which means I think energy is going to prices are going to come down to a level.
Okay.
Okay, then you talked about supply side. Well, in your mind, think about this. That is so since Bernanke got into the Fed in 2000, central bank and government policy has all been focused on pushing the demand curve out. And when
Exactly.
you push the demand curve out, economic growth is also manifested in inflation. This is economics 101. What the president is doing with his team is he's focused on a supply side policy. Whereas if you push the supply curve out, the economy grows, prices go down.
Mm.
So we're going to run this economy hot and it's going to be disinflationary. But Paul, we have a whole generation of folks on Wall Street and in policy that have only known Keynesian economics,
Right.
have been only taught Keynesian economics. And on his deathbed, Keynes said, to Hayek, it's a famous story. We should not have called my theory the general theory. It was only designed for a small sliver, which was of an economic situation, which was the 1930s, the
Mhm.
early 1930s. But my publisher wanted to renamed it the general theory to sell more books. And
Mm.
what have we done? We've applied Keynesian economics. Powell, I don't even know because he's not an economist. Powell doesn't even know he's misapplying an economic theory. Keynesian economics was never designed for it. There's my frustration as an economist. And any economist on Wall Street that doesn't understand that is completely and totally disingenuous. I mean, this is
Interesting.
basic graduate school economics.
Do you think okay, so with that being right now, you think this is really just a short-term scenario that plays out because of the events that have been going obviously in the Middle East. The fact that they got this done so quickly is still surprising to me. If in fact it gets done, that's still maybe on the fence a little bit because you are dealing. But even though JD Vance is on his way to Islamabad, I think not today, to possibly get into these peace talks, maybe that will be the closing of the door. When let's kind of shift over to the Fed for a second, because you look at where the Fed is right now and what they have indicated and somewhat forecasted in terms of rate structure for the rest of this year. You have Warsh coming in here in a few months. How do you think that transition plays out for the latter part of the year? Because I saw your tweet this morning. I think you hit it. You said, for the record, my target on the S&P 500 for 2026 still 8,000 as it was coming into the year. Connect that to what's happening with the Fed.
Worst's going to start the small revolution and evolution of central banks back to the center, back to supply side economics. He is very clear on that. So, we start the process. And any of the PhDs, and this is where I got to get into the weeds, any of the PhDs that are on the FOMC, right, understand what is going on. You've got too many people that have votes on the FOMC, too many presidents, regional Fed presidents that only have undergraduate degrees. Imagine somebody being on the Supreme Court of the United States that is not an expert in constitutional law. The construction of the Federal Reserve is abysmal. We should be ashamed of it. But those who have PhDs know exactly what's going on. And we're going to move ourselves back to the center. The other thing I would say with Warsh, which is very interesting, is his mentor is Stanley Druckenmiller.
Oh yeah.
And who has also worked with Stanley Druckenmiller? Who? Besant. There is that bridge,
Yeah,
right?
it's very
I would urge
unusual
your listeners.
connection.
There is a wonderful interview of Warsh at the Hoover Institute, which is Stanford, right? Not your right-wing organization. Beautiful. I think it's about an hour and a half where he lays it all out. So everything we talked about in terms of supply side economics, he gets. And I would also sit there and go, it's going to be very interesting to see what happens in terms of debt management when, it's on the come, of course. But I think you're going to basically pull 100,000 troops out of Europe. You're going to apply AI to DC. You're going to get all the fraud out, right? And when you start really making the government efficient and bringing it into 2026 and 2027, the amount of debt and money we need to run this thing gets less and less and less. And you're seeing it with the labor levels within the government. And at that point in time, I think Warsh is going to rightly contract the balance sheet. But it's a conditional statement, and he says that, right?
How do you
This is something. So what I want to say, Paul, is think that we're back in the 80s and we just got Reagan in, and supply side economics is just being introduced. And we have 2 decades for this to work our way into society and into our economy. I think that's where we are.
All right. So how do you argue that against what I think is still one of the largest economic supporting veins of DC, and that is the military industrial complexes? What you're talking about is a reduction dramatically in global forces. Obviously, that means I would assume that means a reduction in military spending. But that is a major hit because that's pretty much propping up most of DC today. How would that correlate to what you're talking about?
I think given our debt levels, we can't. So this is going to be an evolutionary process. Okay. Given the debt levels, we can no longer fight a 2-front war.
Okay.
And I think one of the things, when we going back to a previous question, was I think China was using Iran as a bridgehead to bog the Americans or to bog us down in the Middle East and in Europe so that we waste military forces in there. If we solve the Middle East, right, and we pull NATO out, then we can basically for a period of time shift our focus to Asia, right?
Interesting.
And
Yeah.
so it'll be this will be a long-term rationalization process. But let's be clear, this isn't it's not happy days are here again in terms of the great game between China and the United States, as you touched on. And this is sort of like when you were saying it, I harken back why I use the 90s, because in the 90s, coming out of the Cold War, the matter of national security and existential threat economically wasn't China, it was Japan,
Hmm.
right? And everybody
Right.
thought that the best days of the United States were behind it.
Hmm.
And the unique aspect of the states is its willingness to structurally adjust and a willingness to go through the pain of structural adjustment to ensure that they are, at the leading edge. And I think the other thing that's very important that I think gets discounted is that if you go back in society or if you go back in centuries, the willingness of the president to fight wars, to maintain the economic and security of the United States should not be discounted,
Yeah.
because it's only when we lose the willingness to fight that the empire truly declines.
Right.
Think about Keir Starmer in the United Kingdom. Think about those individuals
Good example.
in the EU. This is classic. They are unwilling to fight for their countries, their cultures. They are too lazy, they are too complacent. That is the number one indicative factor of decline of a civilization. And we're not seeing it over here, but we
Right.
sure as heck are seeing it over in Europe.
Okay, so let's kind of forecast this out a little bit because this looks to me as that we're going to have a fairly significant impact on the asset structure of the United States, whether you're in gold, digital assets, securities, bonds. We're going to see some potential opportunity here. Many people are trying to detect whether or not is this the bottom of this current market run that we're in right now. We've seen the S&P fall. Now it's starting. I mean, it's spiked over the last week, which has been consistent. But if you look at the current administration and the architecture that this would require, what you're talking about, really, that's probably 2 or 3 presidencies. How does the Republicans hold that line, or do you feel like there's someone within the Democrat Party that could possibly bridge that gap in case the Democrats win, whether it's in this election or the following one?
So the way I would frame that to you is, again, I'm going back to President Reagan, right? And what I would say to you, Paul, is Bill Clinton and Al Gore implemented a supply side policy.
Yeah.
So what happened was is that our society and our political class is going to go through this generational shift. So that I think by, let's just say, you know, uh, Rubio or JD Vance becomes the president
Mhm.
and they have an 8-year term, I think by the time that ends, we as a culture and society this will be such the norm that it will
Yeah.
be the Trump policies, yet with whether it's a Democratic spin or a Republican spin. In my mind, that's what I think's happening. We have gone, we have gone to the extreme of progressive left woke DEI in terms of the implementation. The pendulum is starting
It's
to
swinging.
swing
Yeah, for
back to
sure.
the center.
We're seeing it.
Some people call this the Overton window is moving back to the center. And I
Yeah.
would suggest to you in 20 years, because this is what's going to happen. We're going to go too far with supply side economics, just like we went too far with Keynesian. But
Sure.
in 20 years, the pendulum will have swung too far, right, to the right. And then we'll start this process. And this is what we do. And
Yeah,
so, as
it's
a
exactly
strategist, what I'm
human
saying is we're
nature.
here. Now the pendulum is going
Gary,
here.
just stop swinging this pendulum.
No, Then it
That
becomes
would be,
communism.
yeah. Well, true. Very good point. All right. So you feel very positive that this is starting to layer in to a plan that this administration has been constructing really since Trump's last term, and now it's starting to play out. When you look at over the next 2 years, where do you feel the asset holders will be? Because I think this is a time right now where a lot of people who have never held assets, there's a lot of Gen Z that are in the markets right now starting to buy crypto for the first time, maybe buying their first stock over on Robinhood. Where will asset holders be in 2 years? Should we jettison all cash and just start moving toward gold and assets?
Well, yeah, if own a minimum amount of cash, one.
Yeah.
Two, you have a couple of big themes going on here. One is the rebuilding and and the retooling of America.
Yep.
Productive capital. And so that is, infrastructure in the United States. That's cat. That's deer. And then you've
Yep.
got this AI, this AI theme, which is generational. And if you go back to the 1990s on that, we're in this phase where you want to own infrastructure plays within that theme as well, and you want to own hardware.
Yeah.
So, I mean, where everybody's talking about software, we like in the 90s, you owned the routers, you owned Cisco, you owned
Yep.
those companies that built the internet out. And then
Mhm.
once the platform was built, which was in 2000, right? Then you shifted your focus from hardware to software. Okay.
Interesting.
So this is semis, this is memory, this is hard drives. As Secretary Bessent says, it's cheap energy is the competitive advantage. We have a ton. Everybody's talking about oil. Well, natural gas is down 30% year to date. How do we
Yep.
convert natural gas into electricity? That's GE Vernova, right?
Yep.
Yes, nuclear's great, but it's long term, right? And so you've got these big themes of rebuilding. So you've got the rebuilding of America, the rebuilding of real assets, okay? And then we've got crypto, right? And then we've got Bitcoin that's evolution has been delayed because of the Biden administration and Wall Street
Yep.
pushing back on that. And what I think, going back to your previous question earlier on, how I frame this is this, right? I want you to go back to 2008, right? Because
Oh, that's
I frame
painful.
the financial crisis a heck of a lot differently than consensus.
Mhm.
And to be clear, we had no exposure. The institution we worked really hard. But even though Countrywide blew up and Bear Stearns blew up, what really was the forcing function for the crisis and for the economy to go full stop in September of '08, it was a settlement issue. And it was a settlement of near cash instruments. That's the fancy term. Let me give
Right.
you the street layman. It's when the money market funds broke the buck.
Yep.
4 or 5 months later, lo and behold, we get Satoshi Nakamoto's paper on Bitcoin.
Yep.
Okay. There is no, Alan Greenspan presented this to the Senate about, what the cause was. The cause was when you had counterparty risk, you couldn't know who the counterparty risk was to a near cash instrument, not some high flying stock or whatever. That's when the system blew up.
Yeah.
Okay.
Yeah.
There's no counterparty risk to Bitcoin.
Right.
That's
Well,
the
digital
solution.
assets have changed that
Right.
in a big
So
way.
that's the kernel of the new financial system right
Mm.
there,
Yep.
Bitcoin. And then we build out from there, right?
All right. So you've got a lot. Obviously, looks like clarity may. I'm hearing more and more stories dropping today. It looks like Brian Armstrong's finally said, "Hey, we're good to go." Maybe the banks have come to a settlement. Besson's putting pressure on. Patrick Witt is putting pressure on. So maybe there is a major advancement here for sure. which goes into the point that you're talking about, which is really this next 12 months could be a very beneficial 12 months for asset holders. So constructing your portfolios, guys, is the way to go. Keep an eye on everything that's happening because right now the global position, I think, is starting to finally get into reality. So James Thorne coming in today with us. We appreciate you on the show. Thanks for coming in.
Thank you.